hit that first and second target. And I mentioned in my previous video, MSTR MicroStrategy on a break of that 327.27 price support coinciding with that hidden primary trend line would offer an objective entry short trade setup. And we had a pretty big breakdown here, almost down 8% all to the bottom of the lows today. It was a pretty big move off of only a 2% down move on Bitcoin. So a huge difference, correlation in between the two. Investors are starting to wake up to the reality of Michael Saylor, MicroStrategy, and how leveraged they are. On a break of 21,000 spot price Bitcoin, you're going to have Michael Saylor and CEO of the company MicroStrategy start to owe money on some of the bond issuance. So here we go, down for a 12.7% drop there. Good for a 12.7% drop. Dip buyers did step in slightly before that 278.13 price support. Again, like I say, you want to cover profit. And if not, if you were buying, adding buy orders slightly above this 278.13 price support, which coincides with the backfill of the gap there. So again, you know, that's where dip buyers had stepped in. This is your dollar cost average. You're so far good for 4% on that trade. If you're getting that dollar cost average now, for the bullish case scenario, what you want to see is a recovery of the 327.27 resistance and a recovery of this primary hidden trend line here. And if you can do that, you could potentially, and again I say potentially, put in positive divergence and or bullish divergences in potentially all three indicators here, and a retest and a back test of its zero lines on both the MACD and oscillator. So that is a possibility. Is there anything to suggest now it's the bottom? Not really. But again, I would favor backtest, which would offer another objective short trade entry off this primary hidden trend line, 327.27 price resistance, or dollar cost average, your short long-term and or leap contract trades. And again, the bulls want to see a break back above this primary hidden trend line and gun for its 50-day moving average again, and recover that as well. That's the bullish case scenario and what you want to see. Again, we are in like I said in my previous video, the 278.13 price support off the gap here is your big moment of truth, in my opinion, because the 278.13 price support gets taken out, you're going to burn off any potential divergences that were intact here on all three indicators, and that would be a pretty big size move in my opinion, which would probably crash down another 13% down to that 229.40 price support, in my opinion, which would only make the damage that much larger in some of these indicators. You burn off those bullish divergences, you set off some of those margin and or stop trades and your stop orders, and then that's where you have usually a bigger move with more velocity and bigger speed and more speed. So we'll see what happens. Again, this is a pivotal moment, 278.13. We'll see if it gets taken out on Monday, and if not, again, maybe we recover, have a nice rally, whipsaw rally, counter trend rally, back up to this resistance up again, and again, that's where you'd buy and or dollar cost average some of that short trade setup, and try to gun for that 278.13. But this will be your very imperative range here, in my opinion. That's the imperative range for the momentum indicators and the damage it's already assessed. So we'll see if there's anything new that gets updated. I'll let you know. Hit the like and subscribe button, please, and I'll keep you updated.